economic structures and transformation within specific sectors, including the participation in cross-border production chains, have been gaining significance. Emerging Asia has also been able to leverage on technology to push beyond the prevailing frontiers. Firms in emerging Asia are also increasingly innovating and allocating resources to research and development and becoming leading players in their various respective industries. And this trend of economic flexibility has been a very important aspect of our region, in particular of the ASEAN region, that we over decade have transformed our economies to change according to the changing economic conditions, not only in our region but also in the world. An equally important economic shift that is taking place in Asia is the rebalancing of our economy from being export dependent to domestic demand becoming an important source of growth. We have often been very criticized, especially countries like Malaysia, where we truly in the 80s and 90s were highly export dependent and our growth was export-led. However, in this more recent times, in the 1990s and this more recent decade, we have shifted, and our growth now, our main driver of growth, is domestic demand. This allows us to diversify the risks and our vulnerabilities to external developments. Rising incomes, stable labor market conditions, and resilient financial systems have supported private consumption and investment activity. Asia is therefore transitioning from being global producers to global consumers. Going forward, I believe that this is a fundamental change that is taking place in our global economy. Asia also has the policy space to support and strengthen domestic demand. Asia is therefore becoming a huge cumulative market in the global economy. Reinforcing this economic flexibility of Asia is the diversity of our region. Asia is one of the most diverse regions in the world in terms of size, stage of development, resources, economic structure, degree of openness, and market orientation. In harnessing each other's comparative advantage and leveraging on regional complementarities as the Asian region, the whole has become significantly greater than the sum of its individual economies. Over the recent decade, this has generated a significant expansion of intra-regional trade, investment, and financial flows. For a country like Malaysia, 60% of our trade now is with Asia. And China, of course, has become our largest trading partner. The trend is expected to intensify significantly going forward. The diversity of emerging Asia also presents immense opportunities in terms of the growing markets across the entire spectrum of products and services. The third key trend that is shaping the future of the region is its demographic advantages. Asia is by far the most populous region of the world, accounting for 60% of the world's population. A vast, growing, and young middle-class population with increasing affluence will be the key defining characteristic and an underlying growth driver for Asia. By 2030, it is projected that the current 500 million Asian middle class will grow by more than six-fold to become more than 3 billion. This will have significant implications on global consumption and trade patterns and on urbanization and infrastructure development. The scale is immense. The Asian Development Bank has also projected that over this decade, Asia will require an investment of over $8 trillion in infrastructure development. It is projected that every year, 44 million Asians are expected to be added to the urban population. The opportunities generated by these trends are being further enhanced by greater regional economic and financial integration. The intensification of regional integration will not only contribute to accelerating Asia's growth momentum, but also strengthen the resilience and stability of the region. The increased intra-regional trade and investment linkages within Asia over this recent decade have strengthened Asia's economic resilience to external shocks. Indeed, the changing patterns of trade have allowed Asia to better withstand and emerge with an earlier recovery from this recent global financial crisis. It has also enabled Asia to be less susceptible to the ongoing deleveraging in the advanced economies. The more recent efforts have focused on strengthening regional financial integration, not only to sustain regional financial stability, but also promote more efficient intermediation of funds in Asia to support the region's growth prospects. It will allow for the effective rechanneling of Asia's sizable stability in our region. The trend paves the way for coordinated policy actions to manage and mitigate the risks and vulnerabilities to our region. Ladies and gentlemen, let me conclude to say that the global economic and financial environment remains highly dynamic and uncertain. And while emerging Asia is unmistakably contributing to reshaping the configuration of the global economy and the international financial system, the fundamental underlying factors driving this global transformation needs to be continually reinforced. It will require our own continuous economic and financial transformation. Most important will be to ensure our economic flexibility to adjust to the rapidly changing global and regional conditions, the strengthening of the connectivity amongst emerging economies in general and within the Asian region, and finally to boost further the resilience of the region to withstand any destabilizing developments. The ASEAN economies have a distinct advantage in terms of their economic flexibility. Their size and stage of development provides the prospects of having greater agility to adjust to the rapidly changing conditions. In terms of connectivity, the ASEAN region is a highly cohesive region. Historically, it goes a long way back to the 1950s. Cooperation and collaboration are evident in most areas of economic activity and the financial sector in both the public and private sectors. Policymakers participate in several regional agreements and arrangements. The large economies, therefore, have the opportunities to leverage on the potential synergies from greater interface with the ASEAN grouping. To realize the Asian potential, continuing the transformative momentum and enhancing the cohesiveness of the region would not be complete without ensuring that the benefits of development is widely shared. Experience has shown, even in the advanced economies, that when inequality is high and significant, instability follows. Greater inclusiveness within economies and across the region is therefore important to ensure the sustainability of our growth and development?
I mean, the output losses of this bank leveraging would exceed 1%, and it will be around 1.5% in 2013. So this is the second break. And the third break is the US story. As you know quite well, the global crisis started with the housing bubble. And in the United States, there are excessive household leveraging and proliferation of the excessively risky mortgages extended by the US banks. 5 years has passed. 5 years has passed since the Lehman shock, but still the US is struggling with the legacy of excess supply of housing and high household leverage. As you can see in this slide, the number of units under foreclosures remain very high, causing downward pressure on housing prices. And this situation is imposing a significant drag on the consumption. As you know, consumption is the main engine of growth in the US economy. And we are expecting this situation to continue. And our calculation suggests that the foreclosures of the units during 2008 to 10 cost about 1% of US GDP in total. So these are the three breaks to the global economy. We are not expecting the situation to change in a short period of time. So we have to keep watching how the break works or the break doesn't work. So the major risk we have to think about, as you know, is the situation in Euro area. This slide is a kind of a conceptual chart, but this is a famous vicious cycle among a fiscal problem, the banking sector problem, and the growth. Some people call it a negative feedback loops in Europe. Some people call it a vicious cycles. For example, doubts about the fiscal sustainability in whichever the country it is. For example, Spain. This is just an example. Doubts about the fiscal sustainability in Spain could be caused by the unconvincing fiscal recovery path, and which this will translate into doubts in the health of the banking system, because banks hold lots of sovereign debts, lots of government bonds of that country. And as the doubts on the banking sector arises, banks will have a problem in funding in the market. And this bank funding risk will be translated into the financial financing risk. I mean, the governments will have difficulty raising money for refinancing their government debts. And those two will have impacts on the growth. So these three issues are interlinked, and it is very difficult to break at this moment in Europe. There are various measures taken by Europe, such as LTRO. This is the European Central Bank's refinancing operation. SMP, this is the central bank's purchase of the government debts in a secondary market. Firewalls, I think you have heard about ESFS or ESM, things like that. But those are the measures that they have tried to break this vicious cycle among those three. But clearly, much more is needed in Europe to break this vicious cycle. I just want to say two things in this regard. One is that it is important that the growth be maintained. Productivity is everything. I think that is not only the story in Europe, but in all countries. Productivity is everything. If you lose productivity, you will be in trouble. Europe is in trouble. How to raise productivity? It's not easy at all. It takes time. Labor market reform, structural reforms, deregulation, things like that, it takes time. So when you notice the problem, it is too late. So you have to work on how to improve the productivity. In Europe, the same thing applies, but it takes time. They are working on it, but it takes time. The other issue is the problem associated with the currency union. Clearly, more than 10 years has passed since the currency union was introduced, but it is now clear that there were some deficiencies in the currency union. They have to work more on the fiscal union and the financial union. I will not get into the detail, but the process of economic integration is still in the middle, and those discussions on the firewall is just buying time. And during the time the market is relatively stable, they have to work on the fundamental issues of productivity growth and further integration of the euro area. May I use 1 or 2 minutes, if you don't mind? Okay. Let's go to the end of the slides and talk a little bit about Asia. I just want to pick up a few issues that Governor Zeti talked about. I will talk about the medium-term challenges, the issue of current account balances, and consumption investment balance. This left-hand chart shows the size of the current account in each areas. As Governor Zeti pointed out, there is a rapid decline of a trade account surplus in emerging Asia. China is a good example. China had a current account surplus of more than 10% of GDP in 2007, before the crisis, but it went down sharply. In ASEAN as well, there was a decline in current account surplus. The question is whether this is sustainable or not. This decline in current account is caused in part by the weaker external demand and subsequent weak export growth. But there are some structural change that are having impact on the decline in current account surplus, especially the situation in China that is depicted in the right-hand side chart is a very interesting one, but I will not get into the detail. The last page, this chart, Governor Zeti also talked about the very significant characteristic of the Asia region, that is the increase in intra-regional trade. The right-hand side bars shows the increase in intra-regional trade in Asia. It is rapidly increasing, but still Asia is largely dependent on demand coming from Europe and the US. So the countries in this region need to take a look at the situation in the US and Europe carefully so that they can avoid the negative impact coming from those countries. Just one word on the left-hand side, which shows the capital inflow to this region. I just want to say that this green part shows the direct investment. The green part is the direct investment, which is relatively still low. And direct investment seems to be an untapped opportunity for the region. Greater inflow of foreign direct investment would have various advantages for the region, such as the ASEAN countries. So just like the Philippine government is working on this, I think it will provide very good opportunities over the medium term in thinking about how to promote the direct investment coming from abroad. So thank you very much. I may have taken a little bit too much time.
Let's call on our last panelist to speak 5 to 10 minutes on his comments on the two speakers. And the stage is yours. Ed Tether from UBS, everyone.
Well, thank you very much indeed for the kind introduction, and thank you for giving me the opportunity to speak here today. I must say it's very humbling to come after such distinguished speakers as the Governor and Deputy Managing Director. In the next 10 minutes, I wanted to ask what is required of Asia's emerging markets for them to shape the region's future. In doing so, I think I'll pick up on some of the themes, such as inclusiveness and opportunity, that Governor Zeti spoke of. We've all seen the projections or extrapolations that have developing Asia rising as a share of the world economy. Our own numbers on the following chart imply Asia ex-Japan expanding from 23% of world GDP in 2008 to 33% in 2020. The G3 economies of Europe, Japan and the US, meanwhile, are to shrink to 37% of the global economy from 48% in 2008. Of course, this data is just one scenario. There are many others. I think the point is that a good many people think that in coming years, developing Asia can be expected to take a much bigger share of a bigger global income pie. The process is already underway, has been underway for several decades, which means that emerging Asia will continue to face challenges, inequality, access to resources, alongside demographic and environmental change. All of these can be faced, I want to argue, by the notion of creating opportunity. Starting with inequality. I'm not saying actually that inequality in itself is bad. Without an inequality of incomes, there'll be no incentive for hard work and innovation. Nonetheless, Asia does face an inequality-related challenge. The key argument is this: everyone is born an unskilled worker. It is opportunity and luck that determines whether you face poverty in old age. Common sense suggests that a society which is based on equality of opportunity and attempts to compensate some of the unlucky portions of society will have safer streets than one where opportunity is restricted to the lucky few. And then, as any good entrepreneur will tell you, safer streets are good for business, and it follows that safe regions are good for growth. But it's not just about this. If you think about it, we have really no idea who exactly is going to come up with the next groundbreaking idea or innovation. Asian stakeholders would not want to miss an opportunity for somebody having that idea for want of not casting the net wide enough. So if Asia is to see its growth maintained, then Asian policymakers will do well to ensure as many people as possible have the opportunity to take part fully in the growth dynamic. Critically, this is not about the redistribution of income. It's about breaking down barriers to economic resources and hence income generation. Breaking down physical barriers obviously implies infrastructure investment. That's something the ADB is very much a part of and something the Philippine government is very much pushing forwards with right now. But breaking down non-physical barriers to resources will also be critical. Here's 4 reasons why. First, rapid technological adoption and innovation alongside capital investment will be required for the sort of growth rates that many assume for Asia's economies. Of course, Asia is no stranger to structural change. However, demographic aging in large parts of Asia mean that people of all ages will need to have access to ongoing education, technology and capital if they're going to have the opportunity to keep up with and take part in development. Likewise, firms and individuals will do better if they have opportunities to bid for available resources unconstrained by closely held licenses or concessions belonging to the lucky few. Thirdly, relating to this, environmental change is taking place at different, unpredictable ways across different parts of the region. The greater the diversity of economic opportunities, the better firms and individuals will be able to cope. Fourthly, at another level, the point is often made that Asia's expansion will require a great deal of resource inputs, such as energy and minerals. Those resources will more than likely have to come from other parts of the emerging world. At the same time, Asia will need to export to those regions in order to pay for those imports, not least because the relative size of the developed world export markets will be shrinking relative to Asia's growing income. Promoting opportunities for growth in trading partners will lead to better markets further down the road. At almost every level, it will pay for Asia's economies to avoid closing off economic opportunities to people at home and in foreign markets. So once again, peddling opportunity means safer streets, and again, those safer streets are good for business. However, it's all very well arguing for opportunity in the face of inequality, but unless care is taken, those with more resources will naturally try and skew the opportunities in their favour. It is because of this that Asian economies are increasingly demanding greater influence within the bodies that manage the global financial, trade and security infrastructure, G7, G20, the World Bank, the IMF. The groups that currently control those institutions are increasingly, and I guess will have to increasingly, acquiesce to emerging market influence in those bodies. Which brings me to my final argument. Asia's desire to have a position at these institutions is a recognition of the importance of institutions in generating and distributing opportunity and wealth. Now, the importance of opportunities within economies is demonstrated by the chart just before this one. So if you go back a chart, please. This chart shows on the vertical axis the log of US dollar GDP per capita. On the horizontal axis is the World Bank's Doing Business Index ranking. I hope the ADB won't mind me showing this here. On the index, on this Doing Business Index, countries ranked to the right of the chart have a higher ranking and a greater ease of doing business. Those countries are also, as you can see from the chart, typically more successful with higher GDP per capita. The concept behind the Doing Business Index is that in highly ranked countries, individuals find it more efficient and less risky to act on business decisions. Aggregating a host of indicators on information, legal and transaction costs, the Doing Business rankings are positively supported by strong property rights and the rule of law. Meanwhile, they're diminished by evidence of the mechanisms of state control. The rankings are strongest where the masses of business decisions at the microeconomic level are subject to appropriate regulation, free to take place without the burden of high costs. Again, this is about giving people opportunities, business people in this case. The data suggests that the potential for patronage-driven resource allocation frameworks to give way to freer markets will help determine both Asia's and other emerging markets' success. As the variation in Asia shows, from Singapore at one end to, I suppose, Myanmar at the other, this is not something that automatically flows from proximity. It is an evolution that must take place within each country. However, it's a process that can be supported by the international cooperation, and this is happening through the ADB, the World Bank, APEC, and ASEAN, where Governor Zeti gave you some examples. Now, flipping to the final chart, the good news here on this chart is that each of these countries in Asia, at least on the basis of the World Bank indices, is making progress. This chart shows the change over time in around 30 indicators that contribute to the Doing Business rankings. Here, instead of simply ranking the absolute level of various indicators, we've attempted, through a scoring system, to produce a measure of the breadth and scale of improvement in the institutions behind each economy over the last few years. And as you can see, the chart shows some improvements across the board in Asia, and I think a recent speeding up of improvements in the Philippines as well. So to conclude, if the usual extrapolations and projections are correct, Asia's emerging markets will become a larger share of the global economy. Moreover, emerging markets the world over may become more important as Asia's trading partners. However, for this to happen, Asia, alongside all emerging markets, will have to overcome significant challenges in managing inequality, demographics, the environment, and resource access. I've made a brief case here that the willingness of a society to allow freer markets to allocate resources alongside submitting to an appropriate and level legal and regulatory playing field and otherwise limit the inequality of opportunity will be crucial in overcoming these challenges. I've argued this directly from a social perspective, from the perspective and access to resources, and from an institutional perspective. The good news is that it seems that this is fully understood across Asia. There is room for improvement, but of course this is where the growth that we're all so excited about is going to come from. Thank you.
Regulation coming on global banks, including Basel III, needs to reduce things like risk-weighted assets. However, being a debt capital markets practitioner in the region, I see a very different story for banks. I'll give you the example of Philippine banks. They seem very strong capital. They have very good access to markets. So in terms of your comments on the banking system and access to capital and bank capital, there is also, I would say, a very vibrant and thriving local capital market and bond business in all regions, and especially here in the Philippines, and good liquidity. So is that something that you think should be differentiated between your comments on the global banking system? Is Asia protected given this access to capital?
Okay, thank you very much. When I made a presentation on the so-called bank deleveraging, my focus was mainly on the banks in Europe. The situation in Europe and the situation in Asia and other regions are quite different. What we are concerned about right now is that the bank deleveraging in Europe might have impacts on other regions, such as Asia or in Latin America. So far, we have not witnessed much impact coming from European banks on the region in Asia. And there was a little bit of a decline in bank lending coming from the European banks. And there were some sales of bank assets by European banks, but they were mainly replaced by the local banks here and the US and Japanese banks and so on. So what I wanted to, maybe I didn't talk about it in a careful way, but so far the impact of the bank deleveraging in Europe, bank deleveraging of the European banks has not been felt much in this region. But that doesn't mean that there is no risk at all. If there is, recurrence of a very stressful situation in Europe, it could have impacts on the banking activities in Asia. So that is one story. The other story is that the banks in Asia, located in Asia, are generally speaking very healthy. That is our analysis. And they have had no problem in raising capital. Their balance sheets has not been damaged at all. So they are in a healthy situation. So as you say, the banks in this region has had no problem in raising capital in the equity market. They had no problem in a funding market as well. So I guess we have a very happy situation here in Asia, but we have to be watchful about how the situation develops in Europe. Thank you.
Thank you. Just one question, further question for me before we open up to the floor. Dr. Zeti, I'll ask you again. We spoke a little bit about, and Shinohara-san spoke a little bit about the global factors that potentially affect Asia, but I think everyone in this room may see some more specific factors that always tend to come and bite Asia. And this is really inflation, being food prices as a good example. And we saw that about 12 months ago with the price of rice. Oil prices is obviously a key concern and drives inflation as well. And another interesting development across the region is the housing markets and the actual growth, or if there's a bubble across Asia in the housing markets. So whilst people are thinking about Europe, people are thinking about Spain and Italy potentially exploding, should people be a little bit more cautious and step back and think about more Asian pertinent factors? And how do you balance that between these three different factors as well?
Of course, if commodity prices rise and oil prices rise, this will be a supply-led inflation. It would result, as we saw in 2008, 2009. However, given the bleak outlook that has been presented for the major economies and the more moderate growth for the emerging economies, I believe that commodity prices will stabilize. Although we cannot say for energy prices, if supply becomes disrupted as a result of developments in the oil-producing countries, then it would result in higher energy prices. But we have seen that emerging markets, such as those in Asia, could ride out that period. And I believe that we should not rush to tighten policy at a time when the growth outlook is modest for us. In the housing market, however, this requires close monitoring because it can be a source of financial instability and disorderly adjustments in the financial system. Therefore, we need to rely on other tools that we have at our disposal, that is, macroprudential tools, tax changes in tax structures, on property gains tax, and the supervisory oversight. All these can result in reining in excessive speculative activity in the housing market. In Malaysia, this issue is often discussed, but we want to promote house ownership. So the point that we put forward is there must be responsible borrowing on the part of borrowers. Therefore, they have to be credit-worthy. If anyone is credit-worthy, they deserve the right to borrow. And given that we have an environment of rising incomes and job security, so the loan growth of the household sector, mainly for the purchase of residential property and for vehicles, has been rising. But are we concerned? No, because their loan quality is high, the default rate is low, and therefore we have relied on other macroprudential measures and taxes to rein in such borrowing.
Thank you. Okay, so that's the questions from my side. Let's open the questions up to the floor. Again, let's put the text telephone number on the screen, and we take questions by both text and also directly from microphones on the floor. So please open up to the floor for some questions. First question's coming by text, and it's not even in shorthand, so I can read this one fairly well. Let me read the question to the floor. It was said that Asia does not yet have the precondition to have one currency. Do you think the 2015 target is possible?
The answer is a categorical no, because it will be very costly for us to put those preconditions in place. As I've mentioned, Asia is one of the most diverse regions in the world. We will not have the convergence. We will not have the preconditions, even in the next 10 years or more. Beyond that, it is not worth our while to pursue that. But what we are pursuing to achieve the very same objectives that Europe wanted to achieve, and that is a greater shared prosperity for our region, and we are doing it through greater financial integration, that we will better intermediate the funds from our region to productive investment activities in our region. And in this way, we can achieve a greater shared prosperity.
Do the other panelists agree in terms of what, Ed, you seem to be a fairly free market economist. Do you agree in terms of the one currency?
I completely agree with what Governor Zeti says. I spent 10 years watching Europe, and Europe is a relatively non-diverse region. I had to spend hours and hours every day trying to tell the difference between Germany and France. But in Southeast Asia, it's very easy to pick the differences between countries, makes my job very easy, and also makes the conclusion very easy that you don't need a single currency in Southeast Asia or Asia as a whole.
Asia will experience another burst, bubble, like that of 1997, or have we prepared our markets so that it will never happen again? Shinohara-san, we might go to you first on this question, please.
I guess by definition, the bubble repeats. So there will be another burst of the bubble like that in the future. I don't know when. I can only say this. There is a huge difference between the before 1997 period and right now surrounding the countries in Asia. If you look at the balance sheet of the companies, for example, a debt-to-equity ratio is much better. If you look at the government, they are more prudent in managing their macroeconomic policies. The level of foreign reserve is much higher. The banking supervisory authorities have adapted lots of precautionary prudential measures in order to fight against disruptive movements in the markets. And countries in Asia have much more policy buffer than before the Asian crisis period. So I guess the region in general has a much more, how do I put it, resilience to the shocks like that. But that doesn't mean that we will never have a bubble again. We will never have a burst of the bubble again. It seems that people make mistakes again and again. I should say that the people are all stupid. So we make all the same mistakes again and again. That's all I can say.
Observers say that Asia has a long way to go in getting its act together to work as a regional economic force. Countries are competing against each other in attracting investments from other regions through offerings of fiscal and tax incentives. What's your view on this? Do you think this will be addressed also by the economic integration? Governor Zeti.
It is, of course, very important to attract foreign direct investment, and each country can make all its offerings. And this is important because, as I mentioned, each country has their comparative advantage, and they should enter in those areas or they should leave. Malaysia has left many industries that have moved to Vietnam, to China, to India, and so on. But we have to reinvent ourselves, and we have to reinvent ourselves and move to new areas of economic growth. For several decades, Malaysia has moved in and out of areas of comparative advantage. So I believe that it is free competition, and we need, it is a driving force for us to pursue areas in which we can provide incentives to attract foreign direct investment. I should say that the region now, intra-regional investment, is growing very significantly. For Malaysia alone, 5 to 6% of GDP are our investments going out to different parts of the Asian region. I believe that this makes the region more cohesive, and the fact that they are, I believe that the region will offer itself for investments for outside the region to become a force that is to be reckoned with because of what we offer to the rest of the world. All of us have become part of the supply chain, production supply chain, and this is another aspect of it. And logistics, services, design, all these will play a very important part. We need to focus, yes, again, on our areas of comparative advantage. But competition will push us to achieve the optimal level of investments in our region? Thank you.
In terms of the region, let's put it specifically in terms of the Philippines, if you look at an ASEAN region, should you be incentivizing and allowing each of the different countries to put in fiscal and tax incentives, or should it be neutralized? What's best for the region? What's best for competition?
I think each country has to make its own choice. It has to weigh up the benefits, how much it wants a particular sort of investment, how much it wants to compete for a particular sort of investment, and make the benefits, make the cost-benefit analysis on that basis. So I think it would be, and I also tend to believe that if you did try and put in a flat tax incentive for Asia as a whole, then you just get competition through other means for the same investment dollars according to different competitive advantages. So I think it's best to leave it to each country to pursue its own incentives, but also to try and achieve a level playing field, perhaps in the sense in which contracts are legally agreed and signed. So there's a level playing field in that sense, but not in terms of the incentives you put in place.
So then how do we give the Philippines the upper hand, Ed?
Well, the Philippines has the upper hand because of the own separate advantages the Philippines has. It's more fun in the Philippines. You've got the BDO, you've got the tourism, you've got the workforce, a lot of people willing to work, and that's going to be attractive to ageing societies around the world who need either to outsource or to insource workers.
I'd like to speak for the people at the bottom of the pyramid. We discuss them, but then in practice, we hardly walk our talk. What do? We encourage them to save. So they open savings accounts. They earn less than 1%, while inflation rate is more than 3%. So how can they ever get out of poverty? What is being done in Malaysia to address this issue of making the measures accessible to us, accessible to them also? And what is the financial sector doing about this?
It is very important to have a very comprehensive approach, and this involves, from what we have already discussed, education. This opens the door, and therefore education opportunities. And this is very, very important because very often the more well-developed schools are in the urban areas. So the urban areas have better performing schools, and it has to really be a very great commitment on the part of the government to really spread the opportunities for education as widely as possible. Then healthcare and nutrition. Children who live in the rural areas have poor nutrition. They do not have the opportunity to develop, and therefore, again, this will become a vicious circle. So healthcare. And healthcare is provided free at government hospitals throughout our country. So health, education, and finally, the transport system and the financial system that allows for microfinancing, financing to smaller businesses, opportunities. And this is often very discussed in our country when we have foreign-owned banks who do not want to open business in rural areas, for example, or rather non-urban areas. And this is something that you have to have access to financing. So access to financing, education, and healthcare are probably the three important. And of course, Malaysia built a transport system and highway north, south, east, west. And along these transport system, towns developed and mushroom and become more developed. So these are some of the actions that are fundamental, but they have to be persisted with great will on the part. Now, can it happen that disparities arise again? Yes, it can. And this is when you promote growth of certain sectors, let us say the IT sector or some that have high value added to the economy, but the benefits of this are not shared. So you also need to develop activities that are diverse within your economy so that economic activity is not only in the manufacturing or the high-end economic activity, but also in agriculture and others where it provides employment for that segment of the population.
I guess this is the last question, I've been told. To all speakers, if you were given $1 billion, and we can actually do this for real if anyone has $1 billion, we're more than willing to take this, which Asian country would you place your bet on and invest in? And realise that it's a long way to the exit if you don't say the Philippines. It's a very long way. So let me go down the panel. Ed, where would you place your money at the moment? Which Asian country?
Well, I would, as I work as the Southeast Asian economist at UBS, I'm going to cheat and say that ASEAN counts as one integrated or integrating region and place my bets there.
Shinohara-san, where would you put your $1 billion?
I can say nice things and I can say not nice things here. But I guess I would say I would diversify. I really do. I mean, many of the countries in this region are very attractive. You know, for example, in the Philippines, you can see huge room for further development. You know, you can see lots of problems here as well. But that means that there are lots of room for improvement, lots of room for further development in this country. So I certainly want to bet money here in the Philippines, but I can see the same opportunities in other countries in this region as well. So I am trying to be a wise investor, so I guess I will invest my money in East Asia, except for Japan, and Southeast Asia equally.
Thank you. Governor, I think we know what you're going to say, but let's see if we can tempt you away a little bit of capital from Malaysia. Where would you put your $1 billion?
I'm very biased to ASEAN, that I believe that we are mutually reinforcing. So any countries in ASEAN would contribute positively to the overall region, and therefore it is ASEAN.
ASEAN. Very good, very good. Thank you. Well, ladies and gentlemen, I think that brings us to the end. I think the good news on that $1 billion question is, from a debt market perspective, at UBS, we're very proud that we've been involved in raising a lot of the government bonds. And believe me, the ones that we've done in the last 2 or 3 years, there's been 10, 15 times oversubscription, $10, $20 billion raised. And if you compare the lending rates in the CDS of the country, which is running about 150 basis points, with Spain and Italy, which are trying to control their debt levels at 6%, I think that shows where the global community is actually putting their billions of dollars at the moment. And I think that everyone in this room should be proud about the Philippines and the way that the development has pushing the ASEAN region. I'd like to thank our 3 panelists today for their insightful presentation. And a round of applause, please, for our 3 panelists. Enjoy your desserts, everyone. Thank you very much. Appreciate it.